Now that we've taken a look at posting transactions to the general ledger, let's take a look at the example that we did on Tim's garden service. We looked at the effect on the accounting equation. Now let's take a look at what it would actually look like in business when we recorded this and posted it to the general ledger. I'm going to do the first few transactions. I'm going to do the first few general ledger items for you here with you. Then you need to go back and make sure that you do the rest of them yourself, go through, and then you can mark them. So let's just take a look at it. Let's take a little bit slower and make sure that we're comfortable with what we're doing. The first one, Tim deposited 100,000 Rand into the bank account of the business as capital on the 2nd of March. So how would we record this? How would we go about recording this? Well, it's 100,000 Rand is our total. This is going to increase the bank account of the business, and this is capital for him. So I've drawn the first little one for us, and let's say that this is our bank account. We have no accounts as yet, so let's start with bank. When you are dealing with bank in the exam, always leave quite a lot of space because you never know how many transactions you're going to have, and a lot of transactions affect bank. So when we looked at the video on multiple transactions, you'll see that they keep on referring to bank and we keep on saying you go back to it. You don't open up another bank account, you leave this one. So he deposited 100,000 Rand into the bank, to the business bank account on the 2nd of March. Now, bank is an asset, which means it increases on the debit side or the credit side. It increases on the debit side. So the bank account from the business's point of view has increased by 100,000 Rand. And he did this on the 2nd of March. We put our date in there, the bank account. And the question is, what is the other side of the transaction? When we look at the bank account and I go, I've got 100,000 Rand, where did it come from? It is his capital. So now I know where it came from. It is capital. This means that I need and I'm going to put it down here, give us some space. This means that I need a capital account. Capital, my debits and my credits, and my lines are very straight, as you can see. My capital account is my equity. Does equity increase on the debit side or the credit side? Equity, as one of the elements of the financial statements, increases on the credit side. Okay, so our capital increases our bank on the debit side, and our capital account has now got 100,000 Rand in it. It increases on the credit side, and this came from, and you'll find the other side of the transaction in bank, and this was also on the 2nd of March. Very important when you look at this that you're aware and you remember that for every debit there's a credit. So you're always going to have at least 2 marks in an exam for every transaction. One being able to tell what the debit is and one being able to tell what the credit is. Let's take a look at number 2. On the 3rd of March, he purchased 2 lawnmowers for his business and paid for them from the business account. They amounted to 8,000 Rand. So this is now equipment for him, for his business, for 8,000 Rand, and it came out of the bank account. Let's take a look at this. He bought lawnmowers, which are considered assets. It is equipment. We don't have an equipment account yet, so let's open one for him. Again, very straight line, our debit and our credit. So he has bought 8,000 Rands worth of equipment. And this was done on, was it the 3rd or the 4th of March? Oops, let's take a look. It was the 3rd of March. So on the 3rd of March, he bought equipment. Where does the other side go? He bought it from the bank account with cash from the bank. This means that we need to create the other side of the transaction. This is bank, he paid for it in cash. Now, one of the things we could say is, well, if every debit has a credit, then surely if I've debited the bank account or debited the equipment account, then the credit must be in the bank account. So this is what we look at as well. When we look at bank account, would that be right? Or are we just going to put it in credit? Well, let's see. Bank is an asset. An asset increases on the debit side and decreases on the credit side. Are we happy to put this in credit? Well, yes, we are, because he's taken 8,000 Rand out of the bank account and he has bought equipment with it. So your bank account is going to decrease by 8,000 Rand. So we can see that for every debit, there is a credit. So if you got the debit right, it's a lot easier to say, okay, where would the credit go? When we look at this, the other side of the transaction here is equipment, and this was on the 3rd of March. So if you take a look at the bank account now, you can see that on the 2nd of March, 100,000 rands worth of capital was put in, and on the 3rd of March, 8,000 rand was taken out and was spent on equipment. We have a capital account and we have an equipment account. So you can see that the bank account on its own has all the information that it needs. Let's take a look at number 3. On the 3rd of March, he paid 3,500 rand from the business account to Newmarket to design pamphlets to advertise the business. So it came out of the bank account for 3,500 rand and it was advertising expenses. Advertising is an expense, so we need an account for that. We haven't got one yet, and we'll open up an advertising account. Also, debits and credits. And if in exams, when you're doing stuff and maybe when you're learning and you're trying to remember, when you open up the account, make sure you know what it is. Advertising is an expense account, and then for your own purposes, maybe you want to put above there, that's an increase and a decrease, so that each time you look at it, you can, whenever you put in equipment, you know equipment's an asset, it increases on the debit side, decreases on the credit side. Capital is equity, it decreases on the debit side and increases on the credit side. And then the next time you come back to that account, your thinking has already been done for you, and then you can just put it in there straight away. So advertising as an expense increases on the debit side. What day of the month was this? It was on the 3rd of March as well. So on the 3rd of March, he paid 3,500 rand. It came out of the bank account. He paid for it from the bank account. And that means that we need to go put it in the bank account. We have a debit in advertising, which means we need a credit. 3,500 rand. For every debit, there's a credit. This was for advertising. You'll find the other half of the transaction in the advertising account. And this was also on the 3rd of March. Are you happy to just say debit, credit, debit, credit? Well, let's just examine whether or not we're happy with that. Well, let's examine whether or not you're happy with the debits and credits for advertising. In the bank increases on the debit side and decreases on the credit side. When we spend money on advertising, we're taking money out of the bank, which means we are decreasing the bank balance, which means that we're taking 3,500 out of the bank account. So we're happy that that's a credit. In the advertising expense itself, it is an expense, and we know that expenses increase on the debit side. Therefore, we know that we're happy with this as well. Go back and do the rest of your transactions yourself. Make sure that you are happy with the debits and credits, and make sure that you are able to do them, and then go back and mark them for yourself. The only thing I want to highlight before we leave is the bank account. Whenever we talk about the bank account, please know that the bank account that we're dealing with here is from the viewpoint of the business, not the bank account. A lot of students say to me, but Yvonne, I don't really understand why that's the case. So in this case, when we're dealing with this, debits are a good thing. Debit increases the bank account, which means that if the bank account is in debit, if there is a debit, that means you've got money in the bank, which means this is a good thing, right? So we're happy. For us, debit is good because we've got money in the bank. Credit is bad because we don't have money in the bank. But when you speak to the bank, we always talk about the fact that you have a credit bank account, but that's from the viewpoint of the bank. So make very sure that you're comfortable with the fact that this is yours. If the bank phones and says you are in credit with us, that's a good thing, because from their point of view, they owe you money. From their point of view, it's a bad thing. But just understand that when you're talking about terminology of debits and credits, make sure you understand whose viewpoint you're dealing with here. From the business's point of view, their bank account is in debit. Debit is a good thing, they've got money in the bank. From the bank's point of view, it's in credit because for them it's a bad thing because they owe the money to you, it actually belongs to you. Bank account is extremely important. You can see most of your transactions are going to flow through the bank account, so you may want to make sure that you get this right. Go back and do the rest of the transactions. Keep in mind and remember that if you already have the account, don't create the account again. Go back and put it in the same account. And in the next set of videos, we'll talk about closing off the trial balance or closing off the general ledger and creating our trial balance.